Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 16th of April. Starting off with the FTSE 100, which has done what we didn't want it to do, i.e. break through the 78.80 level with the RSI uptrend line break as well. That's been in place since back in January, so difficult to ignore that. A leading indicator on the downside, and below 78.80 on an end-of-day close basis, we risk hitting the floor of that rising trend channel from December. 77.60 over the next week or two. If we do have an end-of-day close back above 78.80, then obviously we're back in that range between 78.80 and around 80.40, and still have the chance of hitting the top of that rising trend channel by the end of, let's say, next month rather than by the end of this month. Onto the DAX, where the situation has been on the edge of late, and here you can see that we've finally broken out comprehensively out of that rising October trend channel. We'd already factored in that we'd have to test the 50-day line 17,700 and perhaps go even lower than that, the old March or initial March support, there 17,600. So that's probably our low point in terms of the sell-off that we've had. Also on the negative side as well is the way that we've had an RSI 50 failure, so that rally to RSI 50 and then down again. So that does suggest actually we've got a bit more on the downside, perhaps towards the 17,000 area and that gap from February, but at the moment a bit early to say that. The most likely thing normally is that we would have an initial reaction, positive reaction off the rising 50-day line. Moving on to the Dow, and here we've had further weakness below the February support. That was around 38,000. Our nightmare scenario was that we would head back to December and I suppose 2024 support there around 37,000 at the moment. Difficult to say that won't happen, especially after the RSI failure at neutral 50 that we had last week. On the upside, the earliest we can start getting excited about the upside would be the end of day close back above two session resistance 38,400. Maybe on to gold, and here we have I suppose made our move. We spiked towards the top of that rising trend channel from February, the peak there around the 2450 area, and still looking for 2480 at the top of that channel, but I suppose that would have to be perhaps going into May rather than by the end of this month. On the downside, the floor of the channel now 2350, so we don't really want to see an end of day close back below that, because otherwise that would suggest perhaps down to 2280. Moving on to Bitcoin, and in the wrong order today. Here we've got a situation where still trying to cling on to the floor of that rising trend channel from October. That's normally around 63,000. At least while we're above that, we've got a chance of having another retest at the top of the recent range, 71, 72,000. If you're looking for any particular trigger at the moment on the long side, it would be an end of day close back above that rising 50-day line at 67,000. The worst we're expecting now is a move down to 60,000, or maybe just to take out the stop losses in the upper 50,000s area, 57, 58, something like that. But you can see that we're now well below RSI 50, and we've had a failure for the RSI well below the neutral 50 level. Moving on to the stocks, and starting off with Cora, and here after a long time, looks like we're returning to form. We've had an unfilled gap to the upside off the low, a bit of bullish divergence there as well, and flattening of the 50-day line suggests that we should at least be able to get up to 2.8 pence, perhaps as soon as the end of this month. But it's a bear trap gap reversal, bear trap rebound from below October support there around 2.1 pence, and the longer we stay above that, the better the chance of 2.8 pence being on its way. Moving on to Conroy Gold, which haven't looked at for a while. We've got a bear trap from below the October support there, 11 pence, and obviously given that gold is in its name, it's long overdue a turnaround above 11 pence, looking for the 50-day line at 12 3/4 pence initially, and then perhaps up to 18 pence by the end of next month, all being well. If we get perhaps we get a retest or a revival of the type of rally that we had back in November. But the key here is that we hold above 11 pence on an end of day close basis. On to hydrogen Utopia, which seems to be rising despite the wide spreads that we've had. Looking at unfilled gap to the upside that we talked about yesterday, a rising trend channel there from September, And the longer we stay above that 50-day line at 8 pence, the greater the chance of a move up to 16 pence, perhaps by the end of next month. Moving along to Kaz, otherwise known as Kazera, and here you can see that got a positive situation in terms of the recent rebound. We're back above the old support there from December around 0.52. The longer we stay above that, the greater the chance of a move up to 0.75 at the top of that broadening triangle from October as soon as the end of May. Key barrier here, obviously, the 200-day line at 0.62. We haven't been above that properly since, I suppose, this time last year, or actually back in March last year. So interesting setup. But the key here, as I said, staying on the right side of 0.5. Moving on to Kavango, which seems to have rehabilitated itself under the good guidance of Ben Turney, the CEO. Here we've had an unfilled gap to the upside last week, and looking for a retest of June resistance, 1.5 pence, maybe as soon as the end of this month, and that would obviously be taking the shares back to where they were back at the beginning of last year. Upside value while we're above the 0.92 area, as stated previously. On to Lexington, where we were very excited and have been very excited at the rising trend channel base, and just now approaching our target there at 5.4 pence. In fact, we're so near to it, one can draw the next potential target on the way up, and that would be the upper parallel of that September line, currently pointing to 7.5 pence, which could be the target for the shares by the end of next month or even sooner. That gap through the 200-day line today, very, very impressive indeed. On to Oracle Power, and here the update today helping the shares. We've got a, I suppose it's a broadening triangle base. It's difficult to actually say what it is, a mixture between the broadening triangle and a rising trend channel. But here we've had an unfilled gap to the upside last week, and looking for the shares basically to head back to the 200-day line area, 0.05 by the end of next month or even sooner. The key here is staying above that 50-day line around 0.26. Powerhouse Energy is next, and here RNS today for the shares. It's a gap fill rebound, so filling that gap from March last month, 0.88 above that on an end of day close basis. Looking once again for 1.3, 1.4 pence to be revealed, ideally by the end of this month. The upside value while there's no end of day close back below that gap floor at 0.88. Moving along to Seed, where there's been a special dividend for shareholders, and here we've got the shares gapping through the now rising 200-day moving average at 2.4 pence. Above that, we're looking for 3.3 pence by the end of next month, while we're above the 50-day moving average around 2.13. So hopefully that special dividend will keep the momentum going there. Finishing off with Serinus, which is approaching the top of that broadening triangle from back in November. That's around the 4 pence level, and we're looking for that while we're above the 200-day moving average around 2.9. But the key here, I suppose, is that finally, after a long bear run, the shares look as though they are turning around. That's a very long bear run there. That's it for me today. More updates tomorrow.